Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Happy Friday, our Friday show. Hopefully everybody had a great week. So let's start with today's rally. If somebody told you last night with Amazon getting crushed, missing bad, all the fangs this week missing bad, Apple kind of missing. If somebody told you last night that the market was going to rally, that the Dow was going to be up 900 points, S&P was going to be up close to 100, what would you have thought, right? Crazy, right? But here's the thing. I've said this before and I'll say it again. The market usually baffles the majority. Usually when everybody's lopsided on one side and it seems super obvious, that's usually when the market will turn tail. And in any event, we had a really nice day at TTS. We just took out profits on Dollar Tree calls. I think I mentioned that before. We're still long UNG. We were looking a little dicey on UNG. We were up all the way up to 20. Pulled all the way back down below 18 and, very volatile. And we had a nice surge into the close. So we'll see what happens on that position. I just put on a new TLT position as well for our members in advance of next week's Fed. We have a bunch of things next week. Another volatile week. We had the Fed on Wednesday, as everybody knows. We have non-farm payrolls on Friday. Hey, how you doing, JT? Did you catch any of this rally? We were long TQQQs from yesterday as well. I mean, from actually a week ago, and I'm looking to put on a bunch of positions coming up as we enter the positive seasonal. Now, the only kind of caveat is rates are still. I mean, the Fed could come next week and basically just put a kibosh on everything. So. I'm not suggesting we're out of the woods by any means, but think about it, right? Oh, good, JT. Again, I've been telling you guys, right? The message of the markets. Even this morning, I talked to my members, and we're talking about, in spite of what happened yesterday and through the week. The market was hanging in there, right? The market was hanging tough. Yep, the market was hanging tough. And anytime the market can't go down, what do you think, right? And you have to really be kind of dispassionate, be objective, almost trading like a robot and not care about anything. And you know how I preach that all the time. So, any event, look, where are we at technically? Let's get into the technicals. So I want to start with the NASDAQ because the NASDAQ, if you really think about it, the NASDAQ clearly has been, the laggard, has been the underperformer for obvious reasons, with all the FANG stocks this week and interest rates and all that. That's really been the sector this year that's suffered the most. And essentially we came right down and broke the pivot low around the 10,920, right? That was the pivot low from last week and hung in there and then rallied. And now we're right up against, we've been hitting this 11,725 in the NASDAQ futures. If you guys are pulling up your charts, hopefully you're putting up your charts right now and watching this with me. So all in all, really, the NASDAQ still's got some work. I mean, it's got to get past 11,750. What's going to push it above that? It's tough to say. But again, we cannot have any kind of durable, sustainable rally going into the year end unless we get this NASDAQ going. Now, on the other side, again, I've been talking to my members about this. In fact, we were in Dollar Tree. We're looking at, we were in UNG. We're looking at some defense stocks and so forth, aside from, kind of under the surface. And my point to you is that even, I made this comment the other day where, the FANG stocks may be not the leadership. There are pockets, I've been talking about JPM, Banks did great this, the last couple of weeks. Yep, exactly, JT. Yep. Um, the banks have done great. Look at all the staple stocks have done great. The defense sector stocks, like Northrop Grumman. In fact, if you guys want to participate in that ITA, right? The symbol ITA. That's a great little ETF. You might check out. I typed it in there. ITA for that. That has all the defense stocks in there, which have done great. Big Pharma's done great. We've also had energy, as you guys know. We've participated in the XLE. In fact, I think Exxon Mobil, was it Exxon or Chevron, made an all-time high this week. So my point to everybody is, don't get bogged down. And I know all of you OTA people or whatever, kind of just kind of future centric. I get all that, but you guys have to really kind of branch out a little bit, right? There's so many opportunities. And, I tell people, I just did a presentation yesterday. Money is money, right? Everybody, do you care where you make money? Or do you care where you lose money? Right? I just had somebody said, yeah, Gabe, I'm making all my money, all the money I lose in futures, I make it trading options. Kind of, my futures habits being paid by my options and long-term stocks. Anybody in here in that boat? Right? You know what I'm talking about, right? So anyways, look, yeah, we actually did a few futures trades this week as well. We shorted oil. We're looking at a bunch of stuff, but futures overall have been rather challenging, as you know. The whole currency sector's been just chopping around. Grains have been chopping around. Hi, Nancy. All right. Okay. All right. So let's just get into the technicals real quick. If you guys have any questions, please type it in. And again, pull up your charts, everybody. Yeah. So all told, if we were living in a vacuum and you looked at the chart of the Nasdaq, 10,970 to 10,725. What do we call that? That's called a range, right? That's it. There's obviously there's 300, what is it? Almost 700 points in between there, but that's pretty much what you're looking at. So coming next week, we're probably going to break out of these ranges. I still think we're going to go higher, especially if the Fed has any. Remember, I talked about this last Tuesday, where Fed is starting to get concerned about the bond market. The only fly in the ointment, if you will, the only is going to be rates. Bottom line, right? I've been talking about this almost ad nauseum. That's really what's going to kill this rally. If we have further rise in interest rates, if the 10-year breaks, so let's actually get into the bond market. Looking at the 10-year hit 107 and then pulled back. It's sitting at an accumulation right here at 107 flat. We got to hold on to that, right? If we can rally from here and break above 107.18 on the 10-year, I think that also will give us some more upside on the stock market. But I think that's really worth watching is the bond market, because again, we cannot continue to rally unless the 10-year picks up, and also the 2-year, which I've been talking about. The 2-year just hit also hit a resistance level here at 102.21, right? 102.20. So those are the levels to look at, and it did pull back up this is the 2-year I'm talking about. But we are still looking at some trades below that to get long, and obviously next week with the Fed coming in and non-farm payrolls is going to be interesting. Okay, all right. So that's on the bond market. Let me just real quick get back to small caps. Remember, I've been talking about small caps. We tried to get a pullback here down to the 1760. Never got it. We kind of just went sideways, and now this is really breaking out hard. So on the next pullback, definitely want to see want to get long either futures on the small caps, the Russell RTY or the micro Russell or IWM if you want to take a bit shorter or longer term position. Okay. Look at that 1760 level on RTY, maybe worth taking a look at. Okay. All right. So we just talked about bonds, the 30-year. Now on the TLT, let's take a look at the TLT. Remember I mentioned last week that that huge sell-off we came into last week at the end of the week looked like a capitulation type low coming into those monthly levels around 91, 92 on the TLT. Well, we had a nice rally all the way up to 98. So we went from 90, I think the low was, let's see. 92, let's call it. 92, we rallied all the way up to 98. Okay. And obviously next week, so we are positioned for a market neutral trade on TLT coming into next week because I do expect bonds to make another big move. If there's any kind of hint that the Fed is essentially going to, they're gonna 75 basis points is pretty much locked, is a lock, right, for next Wednesday's meeting. December probably 50, and I'm starting to get the sense that after December, we're probably the Fed's probably going to stop. I don't know. I don't believe they're going to pivot or start, lowering rates anytime soon. But I think that's really going to be helpful to the market if they give any hints of that on the Wednesday press conference. So I do expect a big bond move, and again, either direction, it doesn't matter. That's the beauty of these kind of volatility plays, that when you put these on, just like with we just did with Dollar Tree, it doesn't matter what direction, as long as it has a huge move, which is what Dollar Tree went from like 135, it topped around 159 today. So that's the kind of stuff that we want to look for. And I do suspect we're going to get some kind of move like that in bonds in the next couple of weeks. So we're already positioned for that. So that's that. Now on the dollar, we did have the ECB. I've been talking about that. We had Bank of Japan, ECB. ECB did raise by 75. However, and the the euro did fall back down a little bit, but not anything dramatic. In fact, we got to bounce off this 109.79, 109.27 accumulation that I've been talking about. If you guys are pulling up your charts on the dollar index, you can see that on your charts. Okay. And we kind of bounced off that. We're kind of in no man's land between the 111.88 distribution and the 109.79 accumulation. And so next week, I think, is also going to be pivotal for the dollar. I still believe that the dollar's probably peaked, but still kind of, we still have to break this 109. Really is really what it comes down to. On the currencies, not anything really other than the British pound. I think the British pound also has probably made a bottom. You can see it finally broke above. We're talking about this 114, 115 level. It finally did break above that. There are some levels up top, good shorting levels on the British pound. 120 or so would be a good shorting opportunity for the British pound. We're still a little bit away from that. And then if we get a pullback, still need a little bit more of a rally to get a pullback on the British pound. Yen, yen is kind of trying to put in a bottom. Yen's got to get above 70 on the futures, 0.700, something right in there. There's a huge distribution level there. So watch the yen above that. Generally, just call it 70, right? 0.0777000. Okay, right in there. You'll see it. it's a really nice distribution area. That's where we kind of hung out there for a little bit and then broke down. So those are typically, I call that returning back to the scene of the crime, right? When you have the break and then you have the test, the retest, that's typically what happens. So that's something to look at. On the currency front, that's pretty much it. All the currencies are just kind of chopping around. We're going to need the dollar to really break down to get some movement in the currencies, and I believe we're getting close on that. In the metals, let's move on to the metals. The metals really kind of just chopping around back and forth. Gold looks like it's got a range between 1677 down to about 1620, 27, 30-ish, right in there. You guys pull up your chart. There are some levels I'm looking at below. I think I mentioned this the other day. Below the recent lows here, there's almost like a double bottom or whatever you want to call it, around 1621. You can see that on your charts. If we break down through that, I would actually love to see that, because that would get us down to a 1600 level down in here. And then also silver. Similarly, silver, actually, I want to see silver drop below. I wouldn't be interested in silver until it got closer into the $17.50 area on silver. Okay. All right. So that's that. The rest of the metals, copper range again, 330, let's call it 331 and a half by 360. That's the range in copper. If you want to, if you are so inclined, you could probably trade copper within within those boundaries. All you got to do is look at your daily chart, and you can clearly, I hope you guys are identifying some of these range. Range trading is not bad, right? I know some of you guys want to see trends and all that, but most of these markets, like, there's no trend in HG, right? HG has just been chopping back and forth. Granted, huge rallies and drops, but when you are kind of swinging back and forth, you have to understand. In fact, you've heard me say this before. One of the challenges that a lot of people have is they assume that everything's going to be going in one direction. And oftentimes what happens is, a lot of time, I would say most of the time, before we get a continuation of the move, you're going to get a lot of sideways action, right? And so, we had that big drop in copper, and then we had a really nice pop. And now for the last, since August, we've just been going sideways now for almost 2 months. And when's that going to change? I have no idea. But you guys have to be aware when the market is range bound like this. Again, not to say that there aren't opportunities in there, but you guys have to adopt that type of kind of different methodology, which is just buy low, sell high. And there are a lot of markets that are doing that right now. All the grain markets are kind of like that right now. If you look at the soybeans or wheat or corn, they're just chop back and forth. Very, very tough to trade in that. So one of the things that we've been doing here as at TTS is, again, I talk about not being one dimensional. There's some stocks, there's some great stocks, there's some ETFs, there's options. If you get too one dimensional and lock into one or two things, it can be a bit of a challenge. So, yep. What's my take on oil? It's tough, man. Oil, right? I was going to get to that. So let's review oil. Do you have your charts up, Fernando? Was there a song about you back in the 70s or something? I'm just kidding. You guys remember that? I'm just kidding with you, man. Right? Was it ABBA? There you go. Thank you. So you are familiar. Okay. That's always what I think about when I think about, when I think of Fernando. That's what I think of. Anyways, HABA. Yeah, there you go, Bill. Okay, all right. So yeah, I mean, you remember we were talking about the we basically did a massive rally from our level here, 76.44. You guys saw that. Uh, we were looking for a 95. Now, look at your chart, Fernando. 90 bucks is key resistance right now. Does that make sense? Can you see can you see that those kind of resistance levels up there? 90 bucks. In fact, we came up there, fell all the way back down to 82, rallied all the way back, this week, and then came all the way back down. Right now, it's kind of, again, it's consolidating, right? You can see you had that big, really nice pop out of that ugly range. Again, we had that range for 2-3 days between like 86, 87, and 83, which is really challenging. We tried to short this thing up here a little bit lower, came down. We actually hit it right on the button, came down for 2x, and then came right back up again. Didn't try the second time, but it's challenged, Fernando. I mean, I would wait until we either break down into the low 80s, or even down to, if you look at where we broke out from around the 85, 86, you may find something in there if you want to go long. That would be where you want to get long. And then if you want to go, if you want to wait for a short, maybe come up around I'm looking at about 95. So what I would do is just kind of wait for it to get out of this consolidation and check out which way it's going to go. Does that make sense? Can you see the consolidation that I'm talking about, Fernando? Yeah, so it's just kind of chopping around. I would wait for that kind of consolidation to kind of resolve either way. In other words, let's see what it does. Right? Does that make sense? Before I did anything. Yep. I would not trade a trade in right here. You're going to get all chopped up, right? Okay, and then that gas, we talked about this. We are still in UNG. Longer term. We did come into that weekly distribution around the $5 area. We did roll over, and looking at the December contract, we had that really nice rally. In fact, we were up pretty nicely on our UNG position. We went, we bought that thing at 1748. We got that thing right near the lows, almost right to the button on the lows on the UNG. If you look at your chart, we entered at 1748. That thing went all the way up to 20, and then we gave back a lot of it as we hit that distribution around the 16. On the futures, you can see we kind of hit that kind of supply zone around 628, 630. Gave it all back, and then we had a really nice pop at the close today. So it's going to be tough. It's going to be really volatile. I still, there's a bunch of, even though the weather's been kind of warm, seasonally warm in the east right now, even in Europe, right? I don't know if you guys have been to Europe lately, but they have the weather there isn't horrible, and they did stockpile pretty nicely in Germany and so forth. So. But again, any disruption in Europe in their energy supplies could set this thing, as we know. I mean, this thing's gone crazy this year. We've had 2 round trips, basically from 5 to 10. First round trip was up to 9, back down to 6, back up to 10, and here we are back at 6. So. Could we get another round trip back up there? Of course, you never know. It's a great market to trade, though. Let's see, Bill. They are forecasting over 10K. Huh. Well, I have to tell you, Bill. I mean, the price of nat gas here is not reflecting any of that. So I don't know what's going on. Yeah, and it is puzzling to a lot of folks, right? This is, again, goes back, even like today's stock market rally is kind of a head scratcher for a lot of people, right? That's why I tell you guys, don't worry about the news. Just look at the charts. when the thing was at 10 and looked like it was peaking, nobody knew it was going to go all the way back. I kind of suspected we may do the round trip because that's what markets tend to do. But at the moment, bottom line is if you're at, we're in this trade, right? UNG. If you look at UNG, we got to break above 20. There's a gap at 22 on the UNG. On the futures contract, you pull up the December 630 is really where we got to get past, and then we're going to fill that gap around the $7. You'll see a gap on the charts around the $7 mark on the futures. So those are kind of your points of interest in that market. Okay. Anything else worthy? Let's see, noteworthy. Let's see. They have passed the law in Switzerland. They can. Oh, wow. Man. Well, that's interesting. Well, at least you can have a nice chocolate over there, right? Right, Bill? some hot cocoa, some Swiss mocha, right? Yeah. Anyways, as I mentioned, everybody, look at your so everybody has your charts up. Look at soybeans, chop. I mean, this is a mess, right? Look at this thing. Look at corn, a mess. And wheat, a mess. But we are gonna get something moving on the grains. I'm actually still this kind of chop and coiling up action and whatever you want to call it, tension building, is going to get resolved. None of these markets really stay like this forever, right? Cocoa. I don't trade cocoa. I don't even drink cocoa, let alone trade it, right? Anyways. All right, everybody, I'm going to get out of here. So listen, I have, again, I know you were in the class yesterday. I'm going to have another class in 2 weeks on options. I'll post that next week. I'm, again, sign up for the newsletter if you want to join me for 5 days, all that good stuff. That ice feed is way too expensive. Exactly. Yeah. Well, you got to get the dollar index though, JT. Can't be trading currencies if you don't have the dollar index, right? I don't think. I mean, Anyways, yeah, the dollar index is your roadmap to the currencies, right? All right, everybody. So next week, just I'll see you guys on Tuesday before the Fed. So we'll talk about the Fed. Obviously, that's going to be a day before. We've got non-farm payrolls on Friday. We got some more earnings coming up. So in any event, again, everybody, give me a thumbs up, put some commentary in the chat, let people know that I'm here so that we can get a little bit, I'm getting over 100 views, but we got to grow the channel. So yeah. So, all right, everybody, have a great weekend. And I'll see you on Tuesday. Okay. Take care, everybody.